Welcome to Markets Now. I'm Michelle Rook with Randy Martinson, Martinson Ag. Well, the livestock futures mixed to a little bit on the higher side, while the grain trade is pretty much lower across the board. And Randy, let's start off talking about grains because we've actually hit new contract lows in both new crop corn and soybeans again this morning, haven't we?
We have, and yesterday afternoon's crop progress, crop condition ratings report was, I would have to say maybe a little bit friendly, but the market just kind of ignored it. And they're looking at, I think, the weather forecast that is, calling for the 6 to 10 is calling for, cooler conditions for a majority of the Western Corn Belt and the majority of the Central Corn Belt as well. Throw in the top of that, they're also calling for above normal rain, even though they've had some flooding issues there. The market looks at cool, wet conditions as producing big yields. And I think that's where the funds have just got their control is off of that.
Yeah, so the funds don't care about the lower crop ratings. Apparently, they don't care about some of this flooding that we've had up in the Northwestern Corn Belt either and the damage we could see from that.
They don't, and that's stuff that's going to show up later. And by then they might be adjusting their positions. But in the short term, they're looking at rain makes grain. And that's what continues to push this market down. Now we'll see the planted acres report, which a lot of this crop got planted. It's just that it's not going to get harvested. And again, those are adjustments that we're not going to see coming from USDA until probably, November, maybe even the January final report.
Yeah. And we even got a little export business this morning from Mexico that the market is totally disregarding.
And that's true too. I mean, and that almost tells you that we're got down to, prices low enough where we're encouraging a little bit of demand. And Mexico came in and bought a little bit of old crop, a little bit of new crop corn, which is encouraging because this is some of the first sales we've seen in a while.
Yeah. So talk a little bit about now that, if the funds are selling, we've made these new lows. How much farther do we go down? Where are the next support points that we have here, even on charts?
That's a good question. You look at the corn market, you're going to be thinking that, $4 is going to be the psychological support line. If we break through that, then, we could be looking at a 385 level, which, that's really hard to say. And in this environment, especially over the last couple of years, for soybeans, you would say it probably, it's hard to say the next level there, probably down into that 1150, 1185 area, those areas. But again, I think it's going to be more a timing that's going to cause this market to turn around than it will be the charts or the funds seeing some support being hit.
Yeah, and the wheat market has not helped the row crop sector, and it's been a straight shot down in the wheat market, hasn't it?
It has been, especially Minneapolis. Minneapolis has been hit the hardest, with, I think we're down 18 out of the last 19 days, almost 20 days straight. And that has traded to new contract lows. We haven't hit new lows yet as far as Kansas City or Chicago is concerned, but I bet we're flirting with those right now after the last couple of days of losses.
Yeah, and at least new lows for the move, you got to think, has that been all harvest pressure or better than expected yields, or what's going on over in Europe yet?
Well, I think it's a combination of all of that. I mean, we continue to see the Europe's wheat continues to trade a little bit on the defense. Russia's saying that now that they've gotten some rains, their conditions are improving, and any adjustments to production now will be increased production numbers instead of lower production estimates. And then you've got a good harvest weather, which is pushing the harvest as far as the U.S. is concerned, both the soft red and the hard red winter wheat areas, better than expected yields. All of that is coming in together to, I think, push this market down. And the fact that we do not have exports is adding to it too.
Okay. So with the grains, do you think, since we're going into end of month and end of the quarter, is there any possibility that we're going to be able to stop this slide, or does it depend totally on what we get out of these reports on Friday?
Well, I think the fact that we are coming to the end of the quarter, that's going to help a little bit. But I think it's going to take a little bit of friendly news from the report to be able to convince people to kind of step in front of the train and do some buying. So I do think that we need to see either the stocks estimate has to come in to be a slightly friendly, or the acres estimate. And it doesn't have to be bullish. It just has to be friendly. And I think that could turn the tide.
When you look at the average trade guesses that are out so far, we're looking at very little change in corn, maybe a little bit of a shift out of corn into soybeans, though.
A little bit of that, and I think we're going to see a little bit bigger than that. I still think that not all the corn got planted up in the northern plains, so I expect that we could see 1 million less corn acres. I would have expected that some of those would go towards soybeans, but the wet conditions and the troubles that a lot of areas have had since soybean planting has rolled around, I think those acres are going to stay as prevent plant.
Yeah, but that prevent plant won't show up until what, August? Is that when FSA releases that information?
They'll start releasing their preliminary in August, and then you really don't really look at it until September, because as you have late planting, it just takes guys a little longer to get the FSA and report their acres. So I think a lot of them will still be reporting in August.
And the quarterly stocks, is that where we might get a bullish surprise as well? Because when you look at cash basis levels, they have been pretty darn strong, haven't they?
They have been, and I think that's the surprise that could come for corn. We're talking about heavier slaughter weights for the cattle. That means that we're feeding them more, and that means we got to be pushing more corn. So I think the feed demand for corn has been a little bit better than anticipated, and I think that will lower the stocks for corn, and that could be the bullish surprise that comes in the report.
Yeah. Well, I mentioned mixed to a little bit better over in the cattle futures. We are seeing feeders obviously react to this big pullback in the corn.
We are, and it's still disappointing. I mean, we should be seeing it a lot stronger, but we're up against some pretty strong levels right now. We traded to highs, I think new highs for the year in the fat cattle side of things. Cash is trading at record highs, so it's going to be hard for this market to push a little bit more. But it is trying to get the futures back up into the top end of the trading ranges.
Yeah, I know, but we're still trading at a discount to last week's record cash trade, aren't we?
We are, and quite a bit. We traded cash at 97 was the high. Futures are at 82 to 85. So yeah, we're somewhere in that $10 or better, discount to the futures. So that I think is going to limit any pressure that can go into the futures market. And June is going to go off the board. That means August takes the new top step, and it's even at a discount to the June contract. So it's going to be tough for this market to go down unless we start to see cash crumble a little bit.
The only fly in the ointment might be we're going into end of month and a quarter. Could you see a little profit taking as a result of that?
I don't think we will at this point. We didn't see
Okay.
it from a negative cattle on feed report. That kind of just brushed that off. And I think if we have disappointing features or disappointing consumption through the 4th of July holiday, that might cause a little bit of trouble.
And what about hogs? New contract lows again yesterday. We're trying to bounce off those levels. Is it likely, again, we'll see any short covering going into the end of that quarter, some profit taking in that market?
Boy, I would certainly hope so. And we do have the hogs and pigs report. So I think they're pricing themselves into a negative report. And if that comes in as even neutral, that should encourage a little bit of the funds coming in and covering some of their short positions. So I would expect that we should be seeing a little bit of a bounce in that market.
Okay, so the market is anticipating maybe just a little bit of an expansion then.
That's what I would say. Right now, the way things look and the way the last few reports have come out, you kind of have to lean that direction.
Okay, thanks so much for joining us, Randy Martinson, Martinson Ag. That is Markets Now.